So right now we're going to do an analysis of the volatility 75 market, so we can see what is going on in the market and check our bias for the rest of the week and what we're probably going to be doing on the market. So when I am doing my top-down analysis, I always like to start from the monthly time frame. Now, not like I trade on the monthly time frame, but I like to see exactly what is going on in the market. So right now, as you can see, this market has been bearish. You can see what happened for several months. Market kept moving down, retraced for about 1 2 3 4 for about 4 months. Then market kept going down. But then this previous month, before that was in December, this is December candle. You can see what happened in December. Market failed to break low, so market gave us an inside bar, meaning that market was probably ranging without a clearly defined trend or direction. So that is what I can ascertain. So overall, my monthly time frame is bearish. So now let's see a closer look. Okay, can you see this candle right here? This set of candles right here, they were that single candle that we saw on the monthly time frame. Look at it. This single candle right here, that's the monthly, sorry, that's the set of candles we saw. This set of candles. Okay, so right now you can see that weekly retraced for about 1 2 3 4 5 for about 6 weeks, and now we are back to the downside, sorry. Okay, and from what I can see, market has actually broken structure to the downside right here. So let's go ahead to the daily time frame. On the daily time frame, you can see what all these things that you see here was that pullback that we had on the weekly time frame. I want you to understand this market. You should be able to look at the market and be able to tell a story about the market, a story of what is actually happening in the market. So right now, this right here was the pullback on the weekly, like I mentioned earlier, and from this point that market broke structure to the downside, we see market has been forming lower lows and lower highs. This right here was a liquidity sweep, and now market broke down to the downside. So overall, my higher time frame, which is the monthly, weekly, and daily time frames, are actually aligned. So when these time frames are aligned, you should expect an impulsive move. You should expect strong moves. Okay, and that is what is happening. Let's go down further to the H1 time frame. Now on the H1 time frame, this was the point at this line here, was that line where market broke structure to the downside on the daily time frame, and as you can see, we are on a strong impulsive move to the downside right here. You can see what is going on right here. Market is strongly breaking structure to the downside. So H4 is working with the other time frames, so they are all in alignment. Now this is where it gets more interesting. H1, if you know me very well, you know I like H1 a lot. I like to do my analysis on the H1 time frame. So right now we can see, now let's build a clearer story right here. We can see what was happening in the market. Pullback, break structure, pullback, dust a little bit, and broke structure down to this point right here. Okay, so now we broke structure to the downside. So I want us to take a closer look at what is actually happening. Now this was my last break of structure to the downside. Okay, this was my last break of structure. I'll quickly label that. Now after this break of structure, how do we get a trade? I see many people trying to get trades around here. I don't do that. It's not my trading style at all. Now when this has happened, the first thing I will do after my break of structure has happened, and when I see that market is trying to retrace back so I can get an entry when market is retracing back into the trading range, the first thing I actually do is to mark my high and my low. So this automatically tells me that I should be looking for sales within this area. Okay, now if you understand market structure, trust me, volatility 75 would be much easier for you. Right now I'm going to mark my supply zone. What is my supply zone? My supply zone is the last bullish candle before a strong push to the downside. Okay, right here, this is it, and you can see after this candle was printed, you can see right here we have a fair value gap right here. We also have a fair value gap right here. That's to tell you that this move is a very strong one, so we have good reasons to keep our eyes on these zones. Now on the H1, I have marked my supply zone. Now I will go down to the M15 time frame. On the M15 time frame, you can see what is going on. Market is currently trying to retrace, and if market retraces, then I will be looking for sales. I expect market to close above this point just so that my retracement can be confirmed. If you look on the H1 time frame, you will see that that's a valid place that market needs to break. Okay, so now what I will simply do is to keep my eyes on the M15 time frame to see what the market does. What am I actually expecting? I'm expecting market to break structure to the upside, pull back, break structure to the upside, pull back, and probably react from this zone right here and hit my take profit. But then we don't actually focus on predicting the market. What we simply do in the market is to do our analysis, wait for price to come into the zone, and we look for our entry criteria. If we find our entry criteria, then we can take the sell trade. By the way, market could actually do this. Market could come here, dance a little bit, and break this place with a body with a candle body close. If this happens as well, then I wouldn't be looking for sales, but I'll be looking for market to do something like this and go upwards. If it is not a liquidity sweep, it could be a liquidity sweep. It could close above this line, which is our correct trading range. It could close above there, but on the lower time frame, like say M5 or M1, we may end up getting a break of structure to the downside, and markets will keep pushing down. We do not know exactly what the market will do, so what we simply do is to sit and wait. We wait with utmost precision. We wait for market to come back to our zones, and if we get a confirmation to take a trade in any direction, we go ahead and execute it. So that's that for volatility 75. If you find this video helpful, please subscribe to my channel, drop a comment, let me know what you want to learn about, and I'll go ahead and create a video that will give you in-depth knowledge about it. Thank you, and see you in my next video.